My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Lousy day? Makes sense. You got a series of numbers from January that were way too hot. And I keep telling you, the hotter the economic data gets, with new jobs and inflation galore, the worse the stock market will behave. It means the Federal Reserve needs to keep lowering the boom on us. The market's frantically trying to find its footing, but it just can't without some cooler inflation numbers. It's exasperating. Unfortunately, we got the exact opposite today. Dow tumbled 337 points. S&P sank 1.05%. NASDAQ plunged 1.69%. See, it turns out that January, whose data we're looking at, was incredibly robust for the economy. And we got a host of numbers that showed that the Fed's no longer actually making progress in its war against food, housing, and wage inflation. The strangest thing is, we all knew this. We all knew that January defied higher rates, but I need to warn you, the Fed will keep tightening until we get some major numbers that show a real victory against inflation. Until then, there's no sense fighting it. The market has to go lower as interest rates go higher. The good news is we're getting oversold. The bad news is we haven't bottomed yet because we're not oversold enough. Not everything's bad. If you want some positives in this week's game plan, look no further than the Berkshire Hathaway quarter tomorrow. Of course, it'll be dissected aggressively on Monday, producing a nice counter to all of this negative news. Look, I hate to simply label Berkshire's CEO Warren Buffett perennially rosy, even, by the way, as roses are perennials. But I fully expect a folksy laundry list about how the mighty U.S. markets transcended a 19% Fed funds rate in the 80s, so a 6% handle won't be devastating if that's where we're headed. We need Buffett to say it, because no one else will. I anticipate nothing but positives. Good way to start the week, don't you think? We're also hosting the CNBC Investing Club annual meeting in New York City this weekend. Club members can watch the stream live tomorrow at cnbc.com/investingclub/live starting at 10:30 a.m. Hey, we're going to bring it. Why don't you join the club? You know, there are a lot of overvalued tech stocks out there. I'm very critical of the companies that either don't turn a profit, but some of them have positive earnings, like Workday and Zoom Video, which report Monday after the close. Only one of them is growing, though, and that's Workday. Both companies have undergone restructurings that include layoffs. If Zoom shows any growth at all, this stock is going to go higher. Bye. And I sure hope it does, because I'm kind of rooting for them. If Workday can accelerate its growth from this level, it, too, will roar. Not everything has to go down, people. On Tuesday, Target starts things off with a quarter that tends to set the tone for the whole day. I think we may have to deal with the fact that there's a ton of weakness in retail in general. I'm worried Target shares might have to revisit the lower levels, maybe even the levels they saw in December, down more than 25 points from here. At those levels, though, it's going to be a buy. But until then, look, it's up in the air. How about that? At the same time, Chevron has an Investor Day event. I think it'll be good, but unfortunately, oil and gas prices have fallen so hard, it might not even matter what they say. The last quarter wasn't up to snuff. The stock's been going down ever since, at least according to Wall Street. To me, I just want to hear Chevron's view. But the stock's pretty much in no man's land. What else? Goldman Sachs has a big investor meeting on Tuesday. I like this one. The stock's very inexpensive here, selling for about 10 times earnings. And this is about as low as the earnings are likely to get, because the capital markets business is more or less dead right now. Can it get more dead? I don't think so. I think the financials are the group to watch, and Goldman in particular could ignite a rally. After the close, we hear from AMC Entertainment. Now, this is a wild one. The CEO, Adam Aron, is a brilliant salesman of his own stock. I bet he tells an amazing story about how this movie chain's doing incredibly well, and everything's great. It's just terrific. It's great. The popcorn, anything. My response, as my wife always says whenever I go on a ridiculous messianic rant/jag, have at it. Knock yourself out. I don't know. What else is there to say about AMC? Wednesday brings us the results for Lowe's. Yeah, the big store, big box, blue sign. Wall Street expecting nothing good. Well, that's perfect for CEO Marvin Ellison when he takes the mic, and I think will tell us a darn good story, complete with optimism for the spring. I like Lowe's because the stock's already been seasoned by that meltdown at Home Depot. It's vaccinated against disappointment. After the close, Salesforce CRM reports. A lot of controversy about this one, led by the different activist hedge funds, but I've got to tell you, I'm betting it dies down. And perhaps, I know this is going to sound surprising, but I know that my partner, David Faber, and I have been talking about it. Maybe Mark Benioff can get back to business and these 5 different activist firms can stop bothering him. Unfortunately, I'm not sure how Salesforce's business is actually doing, which is going to determine how the stock does that day. The stock trades like a nightmare, though. We got a small position in this one for the Charitable Trust. Honestly, I wish we owned more because I believe Benioff can deliver once he makes peace with the activists, but that doesn't mean that the stock's going to rally when we see the number. All right, let's not bury the lead. I should have started with it right here. Wednesday belongs to Elon Musk when Tesla holds an investor meeting. Now, most of these affairs are quite dry. You think this one will be? I think it'll be wild. You can't game a real surprise. I'm not talking about one of those faux, self-generated surprises, but genuine shockers. I think Musk can take aim at his competitors, who simply haven't been able to challenge him yet, the latest being Lucid, which reported particularly hideous numbers. One look at the stocks of Rivian or Fisker tells us these small electric vehicle plays can't keep up. And man, I sure hope Ford fixes the battery in the F-150 Lightning by the time Tesla speaks, or else I think Musk is going to have a little fun with Ford. I enjoy him. I enjoy his banner. I enjoy what he's up to. And I've got to tell you, I think it's going to be some real lights-out stuff when he speaks. I like the stock. Thursday, we got more retailers, all right, including 3 that could be very compelling because of their valuations and because of their stickiness. The first 2, Best Buy and Macy's, they are dirt cheap, and that intrigues me, although neither's going to blow the doors off. And then the one that's sticky is Kroger, because they are able to raise price if its food price goes up. But the Fed, they want to see Kroger's sales go down, frankly. Now, they're not looking specifically at Kroger, but you know what I mean. We want to stop inflation wherever we see it, and it's really bad at the supermarket. After the close, Costco reports. Now, we own this one for the Charitable Trust, too, but the stock has a bad habit of going down on any news, even good news. I mean, that's how bad the market is right now, and it's only going to get worse because we're in a retail bear market. I say this. I say if those of you who have a constitution that can stomach risk, you've got my blessing to buy Costco if it goes down on the quarter. Finally, Friday, we get 3 people from the Fed speaking. Oh, my God. Can I take the day off? I'm looking at my executive producer. Can I take the day off because of these 3? Fed Presidents Lori Logan, Raphael Bostic, along with Michelle Bowman, a member of the Board of Governors. I think any one of these people can sink the market. Do they want to do it? It really doesn't matter. They do it, all right? And we've been dealing with a strong January numbers. I want to at least let us see February numbers before we condemn the market once again. Bottom line, we can still get some individual good stories next week. But for now, I think the market can still head lower until we adjust to the prospect of more aggressive rate hikes to curb this ferociously persistent inflation. Short-term bear, longer-term bull. John in Florida. John.
Booyah, Jim.
Booyah, John. What's going on?
Hey, most travel stocks are knocking it out of the park, but Expedia seems to be broken. Do you see any help for them? What should I do with this?
You know, look, I like Expedia management. We talked to Peter Kern when we were out in Seattle. But I was so impressed with the numbers Fogel put up at Booking. And you know, look up 25 today. I mean, that stock could be even much higher. And by the way, Airbnb is not done going higher. Stop nitpicking. Frank in New York. Frank. Frank?
Hey, booyah, Jim.
Booyah, Frank. How are you?
Good, good. Jim, got a question on Disney.
Sure.
A lot of the investors on television and media saying it's a stock to buy, yet it's nowhere near the 205 high that it was. And also, I'm confused by all the movies doing so well, but the stock's not responding.
Yeah, Frank, look, I got to tell you, look, my Charitable Trust owns it. I had to sit through a ridiculous presentation which said Warner Brothers is the new Disney. Well, how about Disney being the new Disney? I think it's time for Bob Iger to step up and be counted, give us some idea about how he's going to be able to deliver numbers while he's also looking for a successor, because the stock is down a great deal. And I bet you there's some people who are pretty unhappy that it's down this much. Let's go to John in Massachusetts. John.
Hey, Jim, I think you're a rock star at what you do, so for that, we all thank you. My question
my wife doesn't like it. She calls me a mosquito celebrity. She tells me it's an O at the end of mosquito. It's an A. Go ahead. Yeah, she does what she says. What's going on?
My question is with GE Healthcare, which is a recent spinoff from General Electric. I've heard you talk about pigs getting slaughtered for years now, and I have an 89% gain in the stock. I think I might be starting to smell like bacon. What do you think? Buy,
Even
sell, or
beyond
hold?
meat bacon. It's time. Okay, let's get serious, John. I want you to take half that off the table. It's been a real winner. I like the company, but we're not about being bulls make money, bears make money, and hogs. Don't be a hog. All right, we can still get some individual good stories if we don't give up, and we are probably closer to a bottom than anyone thinks. But for now, it's not so good. Mad Money tonight, despite a tough market landscape, Trane, T-R-A-N-E kind, continues to cruise higher. So what's behind the stock's strength? I'm going to get to the bottom of this right with the CEO. Then AAP has pulled back this year, so are investors getting a buying opportunity in this incredible utility? I'm going to check them in the top brass. And last night, Beachy, another good yielder, reported solid results for the fourth quarter after introducing guidance for the rest of the year that I liked. What should investors be watching from Beachy in 2023? Do not miss my exclusive. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.